Hello and welcome, Rahul. You're watching me on my YouTube channel, Rock Talks, or if you're watching me consistently, welcome back to my channel. See, whenever I come in front of you, I try to inform you with something valuable. And everybody has a purpose. They want to do certain activities so that they can make a living. And if you really want to capitalize in this information age, you should have some valuable resources. And I always try to provide that. Because if you really want to be quick, rich personality, then what should you do? I've talked about many avenues. Either we should do a job if we have no money, or if we really want to pursue, we can do professional services, we can do trading, we can do involve ourselves in businesses. But if you really want to get a very mammoth personality who can have a lot of money, then business multiplies very faster. And everybody in this arena, if everybody is thinking to start a business, then the whole country will change. Many unemployment will be generated with the help of businesses. How should you start? What should be in your mind that how to start a business? You can start either with proprietorship in a small business and then later convert it to MSMEs and thereafter private limited companies and public limited companies. There is no barrier. A little bit of legalities and it can be transformed. I have talked about what is proprietorship business, what is partnership business, what is private limited companies and public limited companies. But initially, I will give you information. If you are doing your business on your own, a proprietorship, that means you are individual proprietor. Then you are doing a small business. You are everything of that very business. You are being taxed for the profit you make, and every liability is on your own. You know that is why the PAN is in your name, and you are doing a simple business in your name. But once you will try to start an MSME, the MSME is a different entity, is a legal entity. Whatever measures something, some enterprises you give your name of your enterprise. Then you register it into Udyam. MSME enterprises get registered in Udyam. You get Udyam certificate, but you are the promoter of that very business. You know. So what happens when it becomes a public limited company? It has limited liability. All the taxes of government or in the winding of the companies when it get winded up. You know what happens? You will not be taxed if it is a limited liability. Whatever your share is there in the company, that only be at risk. That is the difference between limited liability company and simple proprietorship or partnership. That is what you have to know. But I want to tell you that how to start a private company, how to scale it up into big private company, or if you really want to convert into a public limited company, privately run, which can be listed in the stock exchange, then how to do it all together. I'm going to unravel it one by one. In order to start a business, a private limited company, you need two directors and at least two promoters or partners, you can say that. If you're 2 or 3 person, you can go for that, and two directors in needed. So when you'll apply, you'll get digital signature certificate and DIN, director identification numbers. You have to accumulate it and then go on a spice portal, register there. You'll be given that. Directors will be given that. But for finding your company to be incorporated, you should have a unique name. You can register your name, and if it will be unique, it will be awarded to you. That is what is the reality. After that, you have to prepare your memorandum of association, your article of association as well. So AOA and MOA, these are the two things that defines about your company. In MOA, you will see that everything is written. What will be the authorized capital? Your address, your name of the companies. What will be the authorized capital? How much you can raise? Because what happens when you have personal business, when you convert into public or private enterprises, you have to change your assets into share capital. The promoters, directors will be given allotted capitals, and that capital comes from authorized capital. Authorized capital is the maximum cap that you get. You have to apply, with the Ministry of Corporation or the ROC, wherever you want to get, your registration get done. Then you have to give your authorized capital as well. And in that very authorized capital, you will issue capital, that will be your issued capital. And then when the amount of the capital that will be subscribed, that will be paid up capital, that will be awarded to share capitals of the promoters or directors, whatever you say, all the people. So know how to convert your personal business into a private limited company. You have to convert all the assets in terms of share. So see, Authorized capital. If you really want to know about registration of private limited companies, I have given detailed video. You'll watch in my video, past video history. You'll see that there is detailed video how to get registered, how to get your PAN and TAN. Why PAN and TAN is needed? PAN of the company is needed because company is making profit and it has to pay. TAN is needed because all the employee in your company, they will be taxed on, on sources, so their salary will be taxed, their rent will be taxed, and those collection of that tax is the responsibility of your company, and your company will remit it through TAN. That is why TAN is needed. And with them, I have already told you, if you really want to get benefits of your MSME company, then Udyam is needed. Otherwise, for private limited company, Udyam is not needed. GST is needed for goods and services that you provide to other people. GST tax, GST is needed. That will be needed because you want to do a business. If you are really promoting your services or products, in a market. So these are all limited, resources that you have to accumulate. And once you have, understand exactly how authorized capital will be essential and paid up capital will be essential. Initially, you won't have to showcase your balance sheet, or profits any kind of. If you want to get registered for your authorized capital, you have to declare it. You have to pay certain money to Ministry of Corporate Affairs. They have to MOCs. You have to pay them premium they charge for authorized capitals. You may start from little capital, thereafter you may change it. After a memorandum or after board meetings, you can issue and you can change that. Now you understood. The game is here. Authorized capital, issued capital, and paid capital. Because once you will go to register your private company, privately owned company, into public limited company, where you can raise capital from people with the help of your shares, authorized capital will be needed because the maximum amount that you can raise is your authorized capital. Suppose you have 10 lakh rupees of authorized capital. That means you have 1 lakh rupees, 1 lakh shares, 10 rupees each. That means 10 lakh rupees. Suppose you issued 2 lakh rupees of share, issued capital, that means 20,000 shares. Then 20,000 shares, suppose people are subscribing to 10,000 of shares. Then the 10,000 shares multiplied by 10 rupees is price. 1 lakh rupees will be the subscribed capital, that means paid up capital, and 20,000 that you have shared, you have issued, that share will be your issued capital. And almost 1 lakh shares and 10 lakh rupees your authorized capital, that Now you understood what is authorized capital, what is paid up capital, what is issued capital. Now you understood. See, whenever you will grow your company, you need money. If you're running an MSME business, you know that exactly that for finances, you may go to banks or your relatives, But if you will go for private limited company, you need more money. More money. How will you raise that? There are certain ways to raise money. Either through angel investors, either through venture capitals, or if it is making profit, then private equity fund will also come in role. These are the ways to raise money initially if you are privately owned company. So angel investors could be your friends, could be your family, mentors, or whoever want to have high net worth people who want to invest in a business. They take more risk, but they know exactly that if they will take risk, they can make profit. So they invest in your companies, and once the stable outcomes comes, profit comes, you can reach to venture capital to invest more. And venture capitals, they come after angel capitals, after angel investors. They want to make more growth, 10x to 100x, make more growth. They want to invest and then they want to capitalize on that interest. So what will happen? They will come, venture capital will come, they will invest in a business, or they may exit through IPOs or selling their portion to a different company. And then thereafter private equity form. They come with more funds because they have access to pensioners and other kind of funds, mutual funds and other kind of funds, and they can invest. They can invest large funds in the business. That is what private equity, and they want more share, and they want more profitability. They want to scale it up, higher growth. So these are the ways you can raise funds, you can raise money. But you have to understand how your business will be enlisted. If you will look after your balance sheet, you have to make profit. Initially, if it is not making money, investors will come, they will invest money, and if your firm is getting run, your company is getting better, then venture capitalists will you'll approach, and if they will invest, it will grow better. Then private equity fund, you can take help of that and you can make your firm better and better. Thereafter, if you go for enlisting to SEBI, Security Exchange Board of India, they will look after your balance sheet and everything. If your balance sheet is really good, making 1 crore profit in previous 2 or 3 years, then you'll be able to enlist that. There are certain conditions of, you have to go through that. But mainly, if the company is making profit or not, that is a condition. And all the venture capitalists and private equity fund, they want to sell their shares, because they want to make profit. And if they would have a scale it up, they would sell their share along with IPO, initial public offering. IPO, is a container. Don't think that only the phrase shares could be issued on IPO. The phrase share is remaining in authorized capital. You can issue that in IPO. But there is another part. Offer for sale, OFS. Already subscribed paid up capital by venture capitalist or by private equity fund. They can also share. They can also sell their shares with the help of IPO. And that is why, when you issue IPO, many subscribers try to know exactly how much OFS, offer for sale, part is there and how much authorized capital is coming, is fresh issue is coming. They want to look into your business profitability. So what will happen, is when IPO is issued, initial public offering is issued, how they disinvest? They sell offer, they bring OFS, they sell their shares and they exit. But they have played a very big role in making the profitability better, and that is why they are bringing IPOs, they are investing in companies, and they try to sell. They may remain for some certain period of time. Again, this further public offering, you may sell their OFS. They may take benefit. Suppose they have invested 1 crore rupees. Suppose, you know 1 crore is 10 lakh rupees of 10 lakh shares. Suppose 1 crore rupees, but at the time of investing, venture capitalist or private equity fund, and they are charging, because they have made your business better, they are charging 50 or 100 rupees. Suppose 100 rupees they are charging premium, because your brand equity has become better, your business has become better, your balance sheet is really important, and your balance sheet is reflecting something better. That each and every time EBITDA, and profit after tax is happening. EBITDA means earning before income tax, depreciation and amortization. Earning before. Profit after tax, PAT, is reflecting really good, more than 1 crore, more than 2 crore, scaling it up. So what happens? Private equity fund has invested 1 crore, and now they're charging 100 rupees premium. Your company is charging 100 rupees premium, and they sell it with 110. Then 10 rupees of share they subscribed, now they're selling 110. That means how much growth? Almost 11 times. Means 1 rupees, 1 crore investment and 11 crore is their profit, their revenue. Yeah. So that much profit they can make, companies. That is why they come. Private equity fund, venture capitals, angel investors, they come. They try to make their profit better, and that is why they try to run your companies. And once your companies goes from privately owned to public limited companies, it will be privately run. Private sector companies are privately run, but they are public limited companies. It may happen. No? If it get listed, it will become public limited company. You have to show certain compliances. Audit will happen. You have to show your quarterly disclosure of your balance sheet. And I will talk deeply about balance sheet. Because balance sheet plays a very big role in your company. You have to maintain it brighter. How? Bring people, process and system, better system in your companies. Do qualityful productions and sell it in a better way. Find sellings, and once all these venture capitals and private equity fund, they have plans, they have better plans, they implement their plans, they try to make your efficiency better, to your sales better. So start a smaller and convert into bigger business. That is what I'm talking about mainly today. You know? So what happens? All these things you knew exactly, that venture capitalist, private equity fund, these are the things that can elevate your companies. And if IPO comes in mass market, initial public offering, it can also fuse some money in your company, because you have still remaining authorized capital. If you don't have, then you may raise it through board approval, through extraordinary general meeting you have to convene, then you can change your memorandum of association, and later on while issuing that, you can raise your authorized capital as well. So fresh issuance, will fuse money in your company, but the part of OFS, offer for sale, will fuse money in the pocket of venture capitalists and all those promoters, because the share is subscribed by them. Their share has been subscribed in a company, so they are selling and they are profiting. But face issuing will fuse the money in capital of the company, new subscribers, new capital. There you can make your balance sheet better. I have talked about in balance sheet. If you know exactly what is capital, what are reserves, what is surplus, these all quickly make it or your net worth. And if you really want to bring tangible net worth, then you have to minus it with intangible assets. What are assets? I have already talked about. But if you really want to know, then your capital, net worth, thereafter long term liabilities, after short term liabilities, long term liabilities, big loans from banks which are for more than 1 years, then these are the term loan liabilities from your partners, from your friends, for longer period of time. These are term liabilities. Short term liabilities, could be creditors who are giving you money for short period of time to bring work in progress, to use it to generate current assets like work in progress, like stocks, which is a work in progress, so all these stocks that you're bringing, inventories that you're bringing in with the help of liabilities that you are taking it from the creditors, so these are the short-term liabilities. Thereafter, when you come towards asset side, you have capital, net block, your plant and machineries, your buildings, your lands, these are the fixed assets. Thereafter, non-tangible assets, asset for more than 1 year you have deposited somewhere, you have invested in some companies. So these are non-current assets. Your current assets, your stocks, your debtors. You have given your products to sale in the market. That those are your debtors. Your short-term deposits can be your current assets. Intangible assets, your brand, your equity. Equity. Your brand equity means your brand value, not equity. Your brand value, your trademark. All these things are not intangible assets. That is what these are the classifications. But once you know exactly how balance sheets and profit loss statements are made, how balance sheets will have to be cleaner and cleaner. How fresh, upcoming of IPOs and money flowing could clean your balance sheets. Because the capital is being inflowed, long-term loans, can be wiped out, that from your balance sheet. So these are the cleaning of balance sheet. Once you understand exactly how the businesses run, you have to understand balance sheet. You have to understand exactly how to convert your small business into a big enterprises. Very few people know that, but if you know exactly all the terms that I have told you, you'll be able to scale up your business, bring better process, system and people, and transform your business altogether. All these ventures that I've told you are ready to pay money, to give you money to scale it up, to scale your business up, and how you can enlist your business, and capital market. Don't confuse that. IPO and FPO is issued by company in primary market, whereas in secondary market, all the subscriber they trade their shares, so that is secondary market is different and primary market is different. So fresh issuing happens on IPOs and FPO through primary market, So all these things you have to know exactly. If you have business knowledge, you can foster your reality in a better way. Thank you for listening to me.